Moving on now to a sharp shockwave ripping through the crypto world. Bitcoin has crashed to its lowest level since April, tumbling to a little over the $82,000 mark. Months of gains vanished in a single Thursday sell-off as traders rushed to exit riskier assets. And what triggered this sudden panic? Surprisingly, it wasn't anything happening with the crypto market itself. It was old-school economic data, the kind that usually moves stocks and bonds, not digital coins. America's latest jobs reports came in far stronger than expected. The economy added 119,000 new jobs, more than double what economists had predicted. On the surface, strong hiring sounds like good news, but in financial markets, it sends another message. The US Federal Reserve may not cut interest rates in December after all. And that instantly changed everything. The CME Group's FedWatch tool, which traders use to guess the Fed's next move, now shows only a 40% chance of a December rate cut. And when rate cuts look less likely, investors quickly pull money out of speculative assets. Crypto sits right at the top of that list. Bitcoin wasn't the only one hit. Ethereum and XRP are trading more than 5% down. Dogecoin too is down by around 7%. What's interesting is that the crash happened on the same day Nvidia posted blockbuster earnings, sending AI stocks soaring. Normally, crypto rides with big tech because many traders invest in both AI and digital assets together. But yesterday, that connection flipped. Since early October, the crypto market has faced a chain of forced liquidations. That's when traders who borrowed heavily to bet on rising prices are forced to sell when the market drops. Those rapid sell-offs revealed how fragile the system still is when confidence suddenly shifts.
But be careful, like any other thing, when you go in big and you see swings of 25% in a blink of an eye, that should raise a little bit of cautionary tale. These things could move quickly.
Just a few months ago, crypto was flying high. Bitcoin crossed $100,000 in late 2024 as investors bet that the Trump presidency would bring friendlier policies. A year later, the market has now lost over $1 trillion in just 6 weeks, erasing nearly all of this year's gains. So why is Bitcoin falling now? Well, part of it is fear. Fear that an AI bubble may be forming. And when investors get nervous, they dump the riskiest assets first. More broadly, another reason is the lingering anxiety over Trump's earlier threats of new tariffs on China. And then there are big investors pulling money out of Bitcoin EFTs this month, forcing funds to sell large amounts of crypto quickly. This selling pressure has pushed prices lower and hurt market confidence. The bigger picture is clearer than ever. Crypto is no longer moving only on blockchain upgrades or industry news. It is reacting to the same forces that move traditional markets, inflation numbers, payroll data, and interest rate expectations. And that sets the stage for what comes next. In this new market era, even the world's most famous digital currency can rise or fall based on something as simple as how many Americans got hired last month. And in crypto, that might be the most surprising plot twist of all.
I was a revolutionary. I became a ruler. I claimed to protect my people. I terrorized them instead. I built palaces. I started wars. I lost everything. Some called me a defender of Arab pride. History remembers me as a dictator.